Hi, welcome to the Market Alert for Wednesday the 9th of September 2015. Starting off in yesterday's pre-market session, you'll see that we had a large move in this session from 16,200 all the way up to 16,450. So 250 point rally, and the reason for that is the futures soared in China in the afternoon session. The Chinese government intervening in the market once again, just to bury all of the bad news. Economic news was very poor with regards to imports, exports, etc. And so the Chinese government decided to intervene into the market, and this is what you're seeing here, and that's why the market was up in the pre-market session. The market then tailed off a bit after the Chinese market closed, and then we were off for the afternoon session. You can see we had a sell there coming down for the support at 16,350. We then had some buys taking us up to the major psychological level there of 16,400. This trade was already long before this signal came in. Then there's a bit of a short, but in the background, of course, the market's already been pumped to the upside. So the long side was better yesterday, and again, this is a classic case of a market it's trying to find direction. Big up days, big down days. I have warned about this before. And then at 1835, we see the market moving strongly higher once more. So a lot of points on the table yesterday in the Dow as the markets came back and got on with it. Last week the Chinese markets were closed, which I didn't know about. The futures markets were open, but that's why it was very quiet for last week. In the daily chart, we're breaking these resistances. We're heading back towards the high of 2 weeks ago. I should just draw this in for you. 16,702 is where this market's heading for, and it's going there so far this morning as well. So we can just remove all of this the other, there we go, extensions and things, just so it makes it a bit clearer to see, and cancel that there. So 16,702 is where the market's heading for. Notice we're going up on low volume. This is a dead cat bounce, but the market's got to do this in order to offload further stocks. And again, we'll just pop in a few more areas here of resistance. And of course, what we've got is the traditional 50 and 200 moving averages here as well. So it'll be interesting to see if this market gets back to the 50 bar average. There's not much chance of these two actually crossing back, but certainly the 50 bar will become an average, because this is widely used by institutions, and therefore it will be taken note of should prices actually go back to this level. On the news front today, we've got the NICE GDP estimate and the JOLTS job opening at 3 p.m. Nothing outside of that UK news, but other than that, then we've got nothing. It's unusual that we get the GDP estimate for the UK at 3 p.m. So interesting one there. I don't normally can't say I've seen it being released at that time before, but maybe it has, just not noticed. And let's have a quick look at China. Again, up today, because obviously they're pumping money into the market to keep the illusion alive that everything's fine, yet the economic news indicates otherwise. So this is blatant and pure manipulation by the Chinese government, and it's something that's been adopted for the last few years. Nothing or nobody is allowed to fail anymore. Stocks aren't allowed to go down, they can only go up, just to keep the global debt illusion alive that everything is fine and dandy. In the implied volatility, 21.24 down from Friday. You can see this in the chart there as well, coming back, but still not back to the 50% line. So still some potential downside in the daily chart, and of the Dow, that is. So we'll just keep an eye on that as prices move higher enough for a natural resistance area before we move lower, and no doubts we should probably do that before the end of this month as well. Right, that's it for this morning. Quick roundup, get us back on track, having missed Monday with the Labour Day celebrations there. Right, that's it. See you in tomorrow's. Have a great day, and as ever, thank you for your support and also for watching. See you in the next one.